Okay, let's do a trade review on SPY. The setup is called price action above the highest moving average. And the moving averages that I follow are the 9, the 20, the 50 SMA, the 100 SMA, and the 200 SMA. And the question is, how do we know that this is going to happen here? How do we know this is going to rip through here? Uh, and how come it didn't go through here? And how come it went through here? So, um, the reason why, through past experience, is that one, in order for this to happen, typically the 100 needs to get below the 200. And so that's one reason why it doesn't break through here. Another reason why it doesn't break through here is that the 9 EMA is too far away from the red here. The 9 EMA needs to be crossing through here for it to happen, and it doesn't happen. Um, let's see. What's another reason? Another reason it doesn't happen then is because here at 716 you have the 5 minute mid Bollinger Band coming down offering resistance. So this could be like a trade off of the 5 minute mid here, uh, for a reversal. So, but later on, um, at 920, as you get price action over the highest moving average here, and it starts to go up on this one, uh, you get a perfect entry at 920. Okay, and that 920 also corresponds to, uh, this breaks over the 200 here, but you still have a big gap between the red and the green here. So this is a false breakout, but it's a good sign. And then it comes back one last time, finds support here perfectly at the 7 a.m. High of the 5 minute candle. So over here, if we look at this candle here, let's see, this candle here, 7 o'clock, this 5 minute candle, that's the high of the candle, that's the low of the candle. Okay, and later on down the road here, you get this perfect entry at 850, and this could be like your first initial entry if you wanted to, but doesn't have to. But false breakout here, perfect support at the high of the 7 o'clock candle, and then it starts creeping up. And this, you can enter through here, take some profit here, and then this is where you really want to enter, near this blue, near this red, and then it just takes off. And if you look at it, you have confirmation on like 5 of the 6 charts that I watch. And what I mean by that is if I enter at green and blue on 5 and 2, we're talking that you're entering the trade at the green line or the blue dotted line on the 5 minute chart or the 2 minute chart. So you get an entry here, 5 minute green on the call chart, 2 minute blue on the 2 minute chart, and many times when you get a retest of the blue here, it's pretty much the same as the 5 minute here. Oftentimes, that's always like a good double confirmation there. Now, if you go to the put chart, which is a chart that I like to trade a lot off of, the entry you get would be right here at 940, entering near green. And if you look at this is actually a triple top here on a 2 minute chart here. That it doesn't get a back above, and so you get a nice entry through here. Anything above here you can stop out on, and then it just flushes down nicely. Okay, you don't really get a good entry here on the 5 minute because these are probably losing value faster. But if you look at SPY itself, you get a perfect entry at green here, and you get a perfect entry at blue here, right here, green and blue. So, and then your stop could be right below here. So out of the 6 charts that I constantly watch for entries, green and blue on 5 and 2, I got good confirmation on 5 out of the 6 charts I watch. And that is gold. That is, that means a lot of money, basically. So, let's go to the ES and let's look at what it would look like if you were to trade the ES. Now, at the same time we're entering this trade, this is right about here, the 940 mark here. 941, 942, okay? You'd want to enter somewhere through here, okay? So, initially on your first entry, maybe you want to make your stop maybe like 5 points away, right? There's like 5 points away right here, so down here would be your stop, okay? But you got to be ready to act quickly. So, actually let's remove that drawing, because I know I have a profit stop up here somewhere here, hold on. I drew this a little earlier. There it is right there. So let's say that would be your stop initially on the entry. Okay. So if your initial entry was through here, okay, so 1/3 position size, let's say, and that's going to be, let's see, 5 minis. Okay, 5 minis. What that means is 5 minis would equal $5-point stop on 5 minis at 5 points per. Your max loss would be $125. Okay, that's what you're looking at. Okay, if you entered here and price actually went all the way down here and stopped you out, okay, that is what your max loss would be. Okay, but what we want to do is we want to add 15 here. Okay, so what you're going to look for, and you got to do this quickly, is first you got to look at the puts, and as this double tops here, and and it starts to go down, this one you enter 5 here, right through there, as it hits the green or very close to the green, and as this candle goes red, and even this candle goes red, that's when you really want to add into it. And anything above here from that point, from this candle on, anything above here, your stop is like way up here. But after you add, you bring your stop to right down through here. Okay, so what that would look like over here on the ES is that this is you might enter here and here, and then from that point, once you enter a little bit more there, you're increasing your size. Then you're going to want to tighten up your window. So then I'd want my window to be about there. So now I'm going to risk 2 points for, let's say, 15 contracts. Okay. So when we do that now, 15 points for 2 contracts, 15 contracts. So we go back here. Now we're going to go, it's a 2-point stop, but we're 15 contracts deep. So that's going to increase our total risk to $150. And so we're really only adding $25 worth of risk by adding size and reducing our stop from 5 points to 2 points. Okay, so had we risked a whole 5 points here, we'd be risking $375. Okay, so that's how you'd want to initially enter the trade and then add size to it as it starts going in your direction, and you know it's going to go in your direction because the puts are going to drop through here, okay, and the calls are also following nicely, going up through here, okay, perfectly. So from that point on, what you want to do is then you want to follow your profit just slightly below, ever slightly below, maybe like always slightly below the last candle here. So, and you want to be below the 1 minute 9 EMA. So you just slowly creep this up. It hits here, goes up, moves up nicely. So now you can move your stop up to here. And if you just follow this 1 minute 9, and it comes close to retesting here and it starts to go up, this is beautiful. It keeps going up and you're just following it up. You're following it up. That's all you're doing. Following it up. Following it up. And then ultimately, it would probably stop you out on this candle here. You might move it up a little bit here, and then boom, stops you on this candle. So that ends up being let's say a 4-point stop. You miss 4 points out of the 20. So if you look at this, that's the high. There's your entry right here. That's like 20 points. I mean, you could take profit along the way. You could, or you could just follow the 1 minute 9 going up. And then if you do that, when it finally breaks through here is when you end up taking all of your profit off. Another way, actually we won't talk about that, but let's go back and look it over here again here. So if you got the 17 contracts or 17 points at 15 contracts and you had $5 per contract, your risk was $150, and then your risk was $150 and your max profit would have been $1,275, but your $150 risk was only for the first, really 3-4 minutes. The first 10 minutes. First 10 minutes. So enter 2, 1, 2, 3, 4, 5, 6, 6 for 6 minutes. You'd be risking 150. Actually, you wouldn't even, at this point, it comes up here, you could even risk even less. If it comes up here, once it starts going up here, I would bring my risk right to here to like 2 points. So that would have been like a 2-point risk. 15 contracts, $5. So yeah. Still 150. So 2-point risk, and then once it gets above here, then you can move your stop up, and now you're going to be break even. So you're only risking the 150 for a few minutes here, and then at that point, psychologically, how do you not hit the take profit button? As this thing starts increasing in value, and it only takes from entry at 940, and you're taking your profit by 10:16, so you're talking about 36 minutes. The biggest problem with this is that the market opens at 6:30, and the best trade that I saw was this one right here. Can you wait 3 hours and 10 minutes for this trade? I mean, there's some other trades, that you could have got. I mean, heck, you could have got, this trade. If you right at the open, bought, that's 52 points right there. Jeez, that would have been crazy nice. But anyway, that's it. Hope this makes sense. Bye.